Is Onchain the new online? I'm Caroline Bowler. Crypto Corner starts now. Welcome to Crypto Corner, presented by BTC Markets, where each episode we explore the latest in crypto market trends. In this episode, we talk all things meme coins, GameStop and NFTs. Joining me is Greg Oakford from Upside Dao to discuss how crypto is on a faster adoption curve than the internet. Greg, thank you so much for joining me.
Thank you for having me. Appreciate it.
So, on-chain is the new online. Can you explain what that all means?
Well, we love a rebrand in crypto. We started off as crypto, we still are crypto. Many people have pivoted to blockchain, to Web3, all these different terminologies, but the new one that's being thrown around is on-chain. And I think it makes sense to me when we look back at the history of the internet. It was the World Wide Web for a while. No one goes around saying the information superhighway anymore. We really have probably landed with online. I'm going to look online for this flight deal. I'm going to book something online. I'm going to go on Instagram. You're online, right? If you're on Instagram. So on-chain is just a way of saying, how do we own a digital asset? So I think, in the coming years, I would suspect that on-chain becomes the dominant term. But really, we're just talking about little bits and pieces here. We heard about Web3 sort of in the last cycle being obviously Web 1 with the introduction of the internet was sort of, we hear this terminology of read, write, own, and basically read was Web 1. Write was Web 2, where it was sort of interacting two-way platforms like Facebook, Instagram, LinkedIn, Twitter, etc. We're now in the era of digital asset ownership, the ownership layer of the internet, and that's Web 3. But I do like this new term online, so I think we are in the future of online and on-chain.
That sounds fantastic. I really like that description that you've given about the read, write, own. I think that really kind of neatly encapsulates the progress that we've made and the direction that we're heading in. So at the top of the program, we talked about how the adoption rate is faster than the internet. Can you share some information on that?
Yeah, I think this is a really fascinating one. Basically, there's a little bit of a study out there. If you take crypto adoption by wallet usage versus IP addresses from the internet. So if you look at the internet from about 1992 and then crypto from about 2016, and why those 2 points, it's when both of them had essentially 1 million users. From that time up until now, so we're only sort of 8 years removed from 2016 with the crypto cycles, we're seeing basically crypto being adopted twice as fast as the internet was, which is pretty staggering when you think about it. Many studies are showing that by next year, as early as 2025, we're going to have 1 billion users using crypto, and by 2030 potentially ranging into the 3 to 4 billion mark. So for all the FUD and for all the sort of drama we hear about crypto sometimes, the adoption curve is undeniable.
And do you have any indication of which geographies are driving that kind of adoption?
Well, here right on our home soil, Australia has a very large percentage per capita. Obviously, we're not the biggest country in the world, but yeah, certainly the US, other parts of Europe, Australia, but even in developing countries, we're seeing crypto adopted much more these days.
And has there been any indication why it's seeing such an, comparatively exponential growth compared to the internet?
Yeah, well, I think when you think about this, what makes me so bullish on crypto or on-chain or Web3 in general is we have a bad memory of history. And if you look back at the internet in 1992, it was really only email, AOL was coming online, but it was really not until probably Windows 95 that everyone had like a home PC. And when I say everyone, not everyone had a home PC, but probably 95 when Windows came out was the first true access where just your regular family had access to the internet. But it wasn't in 1995 that we were doing all the things that we're doing now online. We weren't dating online, we weren't buying airplane tickets, we weren't streaming YouTube. These things came down like 10, 15, 20 years down the track. Uber wasn't around in 1995, it wasn't even around in 2005. So I think when we think about crypto, And technology, because Web 1 and Web 2 hasn't gone away, the information and the ability to spread information is still there via Web 1 and Web 2. So people's curiosity about crypto and just having a different instrument and having programmable internet money is quite fascinating to people. So I think that, for some people thinking that crypto is an allergic word or having an allergic reaction to it, the facts are that people are experimenting with crypto and they want to learn how to use a wallet and they want to get on chain.
Yeah, and I think your point as well about programmable money is fantastic and fascinating and so next level in terms of where financial services are going to go and opening up the world, everybody in the world to have access to financial services in a really meaningful way, a way that's meaningful for them. And I think that's probably to that point about the ownership, the read, write and own. We're changing how we think about financial services as rather being something that I go to a bank or a financial service provider to access. You have far greater control over that access point. And that's revolutionary in terms of how the world has evolved, the history of money. It's never been quite like that before. So long live the revolution. But that's a while away, let's be real. We're quite a while away from seeing that kind of large scale changes. But let's take it back to today then. So what are the current trends that you're seeing in NFTs? I mean, you've been immersed in this space now for a number of years and you've seen it all come and go at this point. So what are you seeing at the moment? What are the current trends?
Yeah, so I think NFTs, this particular crypto cycle, are struggling as a whole. We've seen the emergence of ordinals on Bitcoin, which is essentially NFTs on Bitcoin chain. The previous cycle, the one that I was very deep in, was basically focused on Ethereum NFTs. From a sports perspective, there was a little bit on Flow by Dapper Labs, but this cycle, not only have we got competing attention with meme coins against NFTs, we've also got a bunch of new chains, and we've got layer 2s on Ethereum that are starting to come to the forefront, like Base and Blast, etc. So the attention is fragmented. Basically, the ETH NFT market has been bleeding down, and even in the last 7 days, many of the collections have been down 20, 30, 40%. So if you're holding ETH NFTs right now, it's probably not a great time. But certainly there's a couple of ordinals projects like Quantum Cats, Node Monkeys, Bitcoin Puppets that are doing quite well. Solana has seen, to coincide with the Solana run-up that we saw at the start of this year and even towards the back end of 2023, we have seen the emergence of Solana NFTs like Mad Lads and Solana Monkey Business and some early stage art on Solana as well. But ultimately NFTs are going through a little bit of a moment here, a little bit of maybe an identity crisis. I'm still very bullish on NFTs in general. When you think about going back to what we were saying with Onchain and the ownership layer of the internet, the reality is anyone can make an NFT. So the demand sometimes outweighs, I should say the supply often outweighs the demand, but the reality is there's still multiple 5- and 6-figure NFT sales on a daily basis, but collections are down. And I think for anyone that experienced the NFT mania of 21 and 22 are probably looking at their portfolio going, what is going on? But ultimately I remain pretty bullish on NFTs in general. I think if you look at iconic collections like autoglyphs or fidenzas and chromie squiggles, even though they're going through a moment of down only action, but this is where conviction sometimes pays, and NFTs are one of those odd ones, similar to crypto coins and meme coins. When you see them going up, you feel FOMO and you want to buy in, and when you see them going down, all of a sudden that pretty picture doesn't look as pretty anymore. So maybe now is the time to be looking at some of these NFTs and making sort of a longer term bet. But that's on the speculation side. I think there is probably a lot more speculators than collectors at this moment in time. But when I look at my own portfolio, there's many NFTs that I have in there that are less than $50 or $100, but they mean something to me. They probably elicit a sense of nostalgia when I go back and think, okay, I minted that on the same night Ash Barty won the Australian Open. It was the first time I'd used this minting platform. I can go back to Etherscan. I can look at the date that I minted it, and it means something to me. And we shouldn't always think that the world is going to be all digital. It's not this dystopian future. Many of the NFTs I've blown up on canvas and I have them hanging up at home, and so you then have the digital version and the physical version. So still long on NFTs, but as one of the iconic Twitter personalities, Punk6529, has said often, it might not be till 2030 when we really see what NFTs are going to do.
So just with it then, so for those who weren't across it from the beginning, so NFTs started out on the Ethereum chain, and from memory drove action on that blockchain like nobody's business across those kind of booming years.
Yeah.
And since then, and with that caused all kinds of questions around congestion on that chain, and there was lots of different kind of teething problems. But what you're saying now is that because it's accessible on other chains that have coming through, Solana being probably the better known of them, and then ordinals, which is the Bitcoin blockchain, we're seeing, I suppose, a greater accessibility, greater range of choice for people to create on different chains, so diluting some of that impact on the Ethereum network and on Ethereum NFTs and moving into different ones. I mean, that's, from a layperson point of view, somebody who's outside of NFTs, that sounds like a great thing, that you would want to see that scale of development move away from that congested Ethereum only approach. What's your view?
Yeah, I think like layer twos are obviously helping with the congestion, and the famous incident was CryptoKitties, which was a pioneering collection of NFTs back in 2017, quote unquote, broke the Ethereum blockchain because it congested it so bad that gas fees were astronomical. But yeah, the layer twos like Base, like Blast that I mentioned before, have really taken a lot of that congestion away. The prices that people were paying to mint NFTs. We saw the other side land, which basically marked the top of NFTs in 2022, which was coinciding about 2 weeks before the Terra Luna downfall happened. But we saw people paying up to 2 ETH, myself included, to mint basically invisible land by Yuga Labs. And so gas fees were a problem in the last cycle.
Just with that, because we're just wrapping out of time here, but can you tell me a bit then about the impact of GameStop and how that's working on meme coins, the culture? Yeah,
Roaring Kitty, aka Keith Gill. So this was a 2021 phenomenon in January, I think, when we saw basically a stock that became a meme stock, and so it wasn't valued like a traditional stock. You had Wall Street bets in the Reddit community that pushed the price of this traditional stock, GameStop being essentially a video game store, bricks and mortar. And I think what that highlighted, and then there was a show on Netflix that documented it called Dumb Money, and what we've seen with meme coins in this particular crypto cycle is people are having fun, and does it have an aspect of casino and gambling to it? It 100% does. But I would make the argument when someone bets on the footy this weekend, it's the same thing, right? So people are betting on these culture coins. Often when people go, that's the dumbest thing ever, similar to what we heard about Bored Apes in the last cycle, it only increases the price sometimes because nothing like crypto FUD drives price up often. But we're seeing a bit of a phenomenon where people are sort of essentially signing up knowing this thing's probably going to go to zero at some point, but they're wanting to have a little bit of a punt on these culture coins.
So I think what that is just saying, people are viewing these in a very different way from perhaps how they're viewing Bitcoin or other assets 100%. That are on-chain. Instead they're looking at it as more perhaps emotive, more connected, and linked to other parts of their experience in their life.
Yes, 100%.
All right, that's all we've run out of time. So thank you so much for joining me on Crypto Corner, and we hope to see you again here next time.
You're watching Ticker. We'll have more in just a few minutes.